Welcome to the Scalare Partners Half Year 2026 Investor Webinar. My name is Jackie and I help with investor relations for Scalare. With me this morning, we have the CEO of Scalare, Carolyn Breeze, and founding partner and executive director, Giles Bourne. Before
Morning.
I hand over to Giles, just to note that we will be having a Q&A session at the end. If you have any questions, please type them into the Q&A box on the screen. I would now like to hand over to the webinar to Giles. Please go ahead.
Thanks so much, Jackie, and welcome everyone to our half year 2026 presentation with Scalare Partners. It gives me great pleasure to go through this half year results, and we'll split this presentation into a couple of parts, but I wanted to give you a high level overview of the performance of the company, and then Carolyn Breeze will take you through the results itself, and I'll come back and wrap up at the end. But look, this year, or this half year for Scalare has been a very pivotal half year. We've seen a dramatic increase in our revenue. We've seen our portfolio value increase and our net assets increase. And this has largely come about through the acquisitions that we've done and the integration of those acquisitions into Scalare. And I'll take you through a little bit of the history in a minute on why we set up and why this is really important for us. But what we're finding now with Scalare is we're now involved with more founders than ever before. We work with over 956 founders across multiple programs, memberships, and commercial services, and obviously through our investments as well. But through this half year, we've seen the integration of three very important acquisitions for Scalare. Firstly, there was In-House Ventures, and that's a venture capital marketplace and also a capital raising platform, which is going to become increasingly important for us, supporting these founders in their growth journeys. And then the integration of Tankstream Labs, one of the most successfully performing co-working spaces in Australia. That was a very important acquisition for us, providing a platform to bring together startups. I think it was 270 startups in the Tankstream Labs community, and we get to work closely with them. And then more recently was the Planet Startup acquisition. And Planet Startup really provides support and services around for founders in financial modeling, CFO services, bookkeeping, etc. And it gets us an opportunity to look very closely at startups, work with startups, understand their businesses as we then consider them for investment. And then most recently was the launch of the Founders Union back in February, which was through a big community event we ran. And that brings a platform together to connect the founders, investors and corporate partners together and gets them a place to all integrate together before they evolve into the Scalare community. Through these acquisitions, what we've brought together is a really strong team of leaders in this. We've now got over 40 people working in the Scalare community, and we continue to expand. Moving to the next slide, please. So I want to go back and actually talk a little bit about the history of Scalare and why we're here and why we started this business before we go into the results. And it's really an opportunity for those who don't know what we do to find out a little bit more about how we're different and how we support early stage founders. We're not a fund. We've actually invested always off our balance sheet. So we started the business 6 years ago, and the concept behind it was there's a gap in the market to support early stage founders. We believe that we could come in, not only invest in the early stage founder or startups, but also get deeply involved using our expertise. So the three founders of Scalare all come from operating businesses, and we all felt that we had more than just money to invest in these businesses. We could really add some genuine value through our own experience working with early stage startups. So the concept behind it initially was to invest and provide services at a board level and operational level. And then we've grown that into a more formal environment through the acquisitions, and we now provide a fully integrated service and ecosystem for startups. So we provide community events, diagnostic tools, and I'll drill down into this in a few minutes. We also then provide as many services as we can to help let the founders focus on growing their businesses. And the most important thing about all of this is that all the profits that we derive from these services get reinvested back into the portfolio in the circular economy. So it allows us to really do what we say we're going to do and really help founders grow their business. If we can move to the next slide, please. So really, in the way we operate in this ecosystem, there's three pillars. They're starting with community and events through the likes of Tankstream Labs, through our Australian Technologies Competition, Tech Ready Women, and other Founders Union. We're able to provide events and community events for all our founders to come together share ideas, experience what it's like to be a founder, work with partners, work with our sponsors, bring together mentors, and then importantly, through programs like the Founders Union, we're able to provide diagnostic tools to help founders get clarity on their business and focus on the right priorities. And then alongside that, that third pillar is really the support services. That's providing financial support, providing CFO services, go-to-market, international expansion, capital raising readiness. So preparing slide decks, helping them raise capital, helping them build their businesses, and ultimately towards an exit. So the whole idea about Scalare, it's really a one-stop shop. A founder can come to us, work with us with investors, work with us on the services, and actually we can support them all the way through that journey. We move to the next slide, please. I want to talk a little bit just about the actual investment portfolio itself. So the foundation of Scalare was really to invest in really good businesses and provide a return for our investors in Scalare. It's a way for our investors to access early stage tech investments in Australia through this one portfolio. So being a listed company now, been listed since November 2024, investors can get access to early stage investments in Australia, and we're ones that we've curated. So we're always looking for the best investment opportunities. And clearly, with all of our programs like Tech Ready Women, Australian Technologies Competition, and Founders Union, we get to see many, many good growing technology businesses in Australia. And we get to select the ones that we think have the best business models, the best founders that we can invest in and get the best return for our investors. And obviously, being deeply involved in them, providing services, being on the board, allows us really to get to know these companies well before we invest. And then typically we would write a check up to 250,000 as the initial pre-seed investment in about 8 companies a year. And in some cases, we will do follow-on investments as well. So today, the portfolio stands at 27 high conviction technology investments, predominantly in Australia, but we also have investments in the US, Europe, Singapore, New Zealand. So we're not just limited to Australia. We have operations in the US as well, but predominantly it's in this part of the world. So we've got across multiple different sectors. Predominantly, we invest in sectors that we understand and can add genuine value through, but that is pretty broad across it. So we've got great exposure to the tech community in Australia. If we move to the next slide, please. So before I hand over to Carolyn, I just want to touch on a couple of case studies. So I want to give you some examples of how we're working with different companies in different sort of facets of our business. So starting with you as a UK-based health and fitness app, been very, very successful. We're one of the first checks into that business, and they've done multiple rounds since then, and we've continued to participate with them, and the value has gone up significantly. Along the way, we've helped them at the board level. They've used our CFO on commercial services, and as I say, we continue with follow-on investments. MyPass, also one of our early investments as well. They were involved in the Australian Technologies Competition, which we acquired in 2023. They came through that program, and they also very much involved using our CFO services and support services. One of our more recent investment was Circadian Health Innovations, 2 very, very talented academics out of Flinders University, built a fantastic bit of technology, but clearly needed help on the commercial side. So they've worked closely on our CFO services. They've been involved in the Australian Technologies Competition as well. And then Zondi as well. A number of years ago, we invested them, a winner of one of the Australian Technology Competition Awards. They very much work with us on our CFO and advisory service as well. And they've also gone through the Tech Ready Women program. So just give you an example how not only are we investing, they're working through multiple different programs. So I'll hand over now to Carolyn, who will actually take you through our performance through this half year.
Hi, everyone. Fantastic financial performance for us this half, mainly due to the fact that we were able to realise the revenue partially throughout the half from 2 of our major acquisitions, one being Tankstream Labs and the other one being Planet Startup. So our revenue on the same time period for the year prior is actually up 360%, which is fantastic. And we also had a lot of founders participating in our services and programs across all of our assets. And we launched the Founders Union. So the Founders Union is our platform where founders can come, tell us a little bit about themselves and their business and their challenges. And we use that platform to connect founders to the right assets, brands, services, investors for their business at their stage of growth and take away all the noise from what is a really fragmented ecosystem for founders. That's how we get to know the best of the best founders for investment. But we've had some really encouraging foundational members and sponsors join the Founders Union who also want to participate in the early stage tech innovation sector. So we've had partners like Westpac and Dell and Atlassian and others join to really back founders in those early stages of their journey. So that's seen some really fantastic numbers flow through the business. I'll just go on to the next slide, please. Thank you. So if we break down that revenue analysis, Giles took you through the model before. So basically our operating business, which is the business that provides the necessary services and services and platforms and tools and accelerators to the ecosystem, is what drives our revenue for investment. The revenue was broken down into 3 areas. So communities and events. That includes Tankstream Labs, and that also includes the Founders Union, our platform. Programs and diagnostics. That's if you think about some of the tools that we make available to founders to help diagnose problems in their business and face their challenges and get the right help and support that they need. We also have some platforms that we've released to help the wider ecosystem. So we're helping other partners like universities and corporates and other VCs manage their deal flow for investment as well. And we have the paid accelerator and founder program. So Tech Ready Women is a fantastic example of this. And then support services. So our fractional CFO business, which we've had now in market for over 3 years, but has been really strengthened by the acquisition of Planet Startup coming in this half. And then there's also the investor readiness. So helping founders get ready for cap raising, getting their pitch decks ready, their financial modeling, their data rooms, and then helping them right through to raise that capital. And then there's also commercial services. So helping founders go out and get those first customers and build their go-to-market model. So in Australia, just to give you an understanding of the size of the market and what we're building with this circular economy that is Scalare, there are 137,000 startups in Australia at the moment. We have over 24,000 startups and founders engaged across the databases in our own assets. So we have a really meaningful chunk of that ecosystem that have opted in to receive marketing and communications from us and engage with our brands. So just in the last 12 months alone, we've had 956 founders using paid services. So whether it be the virtual CFO model we spoke about or some of the accelerators or, coming into the Australian Technologies competition. So we've got a really highly engaged base of founders that are interacting with Scalare and the ecosystem. Next slide, please. So again, I think, did we go backwards there? No, cash flow. Yep. So just coming into cash flow. So we had, our receipts are up over 394% increase. So again, a lot of that has to do with the acquisitions that we've made, in particular Tankstream Labs. But I think it's really important to note that we only acquired that business during the half. So that's only since the 10th of September. It's not the full half. So to see the increase in customer receipts and cash flow, even in that short amount of time from the 10th of September to the end of the half, is really indicative of the growth that the business is bringing. I think the other thing that's really worth calling out is the revenue synergies across the assets. So we spent a lot of time making sure that one customer of Tankstream Labs is also a fantastic customer or founder for our virtual services or an accelerator program and so on. So since Tankstream Labs coming on board and the other assets, we've been able to realize over 1.6 million in annual revenue just from those revenue synergies across those different assets. Next slide, please. So again, the balance sheet, just touching on the acquisition. So the acquisition went through on the 10th of September, and then Planet Startup went through on the 30th of September. We did a small capital raise to bring those 2 businesses into the portfolio. We've had no exits during this time. And with the acquisition of Tankstream Labs, we've got this fantastic strong balance sheet moving forward into the next half. Next slide. Thank you. The investment portfolio. So It's worth probably calling out when we do go to market to acquire a business to come into Scalare Partners, we really do look for businesses that are servicing founders in the ecosystem in the way that we are. So we're getting to know a whole new set of founders. We're sport for choice when it comes to deal flow. You know, founders are solving problems and creating businesses every day. And with the really well-established brands and assets that we own in market, we really do get to see the best of the best flowing through. We lower the risk of those investments through the services that we offer. We get really hands-on with our investments. It's, you know, mostly we get to know them through services or one of the accelerator programs or the Australian Technologies competition before we're making that investment, which really de-risks that further. Our investment checks are up to 250K. So we're usually coming in at that pre-seed or seed stage. So we're very early. We play a first-hand role in helping influence the trajectory of those companies and helping them grow. And we do look for companies that are already generating some revenue, which further de-risks our investment. So, you know, that revenue model may change over time as the business grows and matures, but there's been some value exchange, which further de-risks that model. Next slide, please. So within our investment portfolio, you can see the current valuations. And this is how we think about companies at their different stages. So there's product launch. There's 4 companies in that part of the portfolio. So they've launched their product into market. They're gaining that validation. They're generating revenue. And then, you know, market validation. So those companies are really kind of growing now. They've validated their product in market. They're using capital to actually grow and expand revenue momentum. So they're really hitting their strides. When they get to this point, we can see that month-on-month, quarter-on-quarter growth. And we know that every dollar spent in growing the business is returning momentum because they've already validated their product and already validated their go-to-market. And then we move into scaling and globalization. And what's really interesting about this, when you look at this slide, is the fact that Scalare does play in really early stage tech companies. We usually are, you know, in that first or second round of professional checks. Yet we have so many heavyweights in that scaling and globalization part. And I really think that's a tribute to how hands-on we are and how we help these companies scale and grow and accelerate at a really fast pace. Next slide, please. So some of these brands you may recognize. This is our portfolio to date, and you'll see we've mapped them out against those stages that we talked to. We've seen a very healthy 209% total realized and unrealized returns to date for our dollars spent, which is fantastic when you think about the stage that we play in. And I think it comes down a lot to how we make those investment decisions. So we get to know those companies really well through our assets in market before we make those investment decisions. And then we're very hands-on. They're really part of that community. We're very involved in their growth and trajectory. Next slide, please. So our strategic priorities for the rest of this financial year is obviously to continue growing that recurring revenue. So continue growing those businesses like Tech Ready Women, Tankstream Labs, In-House Ventures, and so on. And also keep realizing those revenue synergies across those portfolios. We've had really strong momentum even very early with those acquisitions in being able to identify founders and companies that need services and support from other assets within the Scalare portfolio. We'll continue to enhance that founder experience, so continue to grow the Founders Union, that brand in market, the activations and the support and the events that we provide to founders, and also thinking about what are the next products and services that founders need to be successful, and how does Scalare also supply those as we continue to grow this flywheel and this circular economy, and then continue to complete what is a group-wide integration. So thinking about a lot of those back of house, like operations, marketing, those systems and processes that we have, how do we streamline those across the back end to create more efficiencies across the businesses? Next slide, please. So our M&A strategy. So we are still looking for M&A opportunities. We are always looking for assets in the market that help founders grow and scale their businesses, that are profitable in their own right and are strategically aligned with Scalare and the other assets that we own. So we look for companies that have that recurring and scalable revenue. There's a clear pathway for us to cross-sell or accrete value. So that revenue synergy that we keep talking about, how do we maximize that? Strong leaders. So we're looking for strong founders and CEO-led businesses who want to join and continue to grow and partner with us to build this out. A strong brand and cultural fit, and again, a profitable business that adds to the group's overall profitability even before we see those revenue synergies. So the focus areas at the moment for us, after all these successful acquisitions that we've made, are thinking about more technology-enabled founder tools. So how can we help founders get access to capital? How can we help investor networks and help founders during that really critical time of going to market to raise capital? Commercialization and go to market. So helping founders, again, take their products and services to market, open into new markets and sell their products. And then international expansion opportunities. So how can we help them scale and grow internationally? Next slide.
Yeah. Maybe I'll just take over just to sort of wrap it up and bring it all together. So, thank you, Carolyn. That's a very useful oversight of how the performance has been. But if we could just go, sorry, keep going forward to the appendix, please. I've got a couple of slides that I just want to go through at the end. There we are. I'll start them. So, no, back one. Thank you. So, just a reminder of where we've come from and where we're going. So, go to the next slide, please. We started, as I say, the business in 2020. Here we are in 2026. So we've always been underlying trying to make good investments in good technology scale-ups and startups in Australia when we're still good. We're still very much that sticking to that. But building this services business, wrapping around the whole ecosystem, is helping us to do that smarter and better and find even better companies perform. And we get no shortage of opportunities to invest. So we see a deal flow coming through all these different brands that we have through the Australian Technologies Competition, Tech Ready Women, etc. And now most recently coming through Planet Startup and Tankstream Labs. We get to work closely with founders, see the best opportunities and work with them to drive their companies to success, and obviously to success for our investors and our shareholders who are backing what we're doing. So we'll continue to do that. We'll still look at further acquisition opportunities, and then we'll look at ways that we can drive our companies through to successful exits and unlocking opportunities for our investors actually to see realizations in this. So if we can go to the next slide, just reminding you who is behind this. So our team, obviously you heard from myself and Carolyn today, but also we have our founding partners, James Walker and Nick Roberts, who obviously have vast experience in working with tech founders and continue to do so. And James very much driving our M&A program, and Nick running our investment program, and Hervé obviously behind the CFOing of our business. And our final slide, just to bring it all together before we turn to Q&A, is that we've got a very strong board, obviously supporting what we do in the market, great depth of ASX experience, helping us to grow the business, obviously to work with the capital markets and obviously with our investors to get returns. So thank you very much for your time and attention. And I think we're now going to open up to some questions from the audience.
Thank you, Carolyn and Giles. We will now move to the Q&A session. Once again, if you have any questions, please type them into the box on the screen. We have a few questions already coming through. So your first question, how much of the investment portfolio is in SaaS business vs other technology businesses?
So that's a very good question. We've got a fairly broad view of the tech market. We did certainly have some SaaS companies there. We've also got hardware. I couldn't, without drilling down to give you exact percentage numbers, but we have a good spread across the technology, hardware, SaaS, and so on and so forth. Karen, do you have any stats in front of you on that? I don't have that to hand, but
yeah, no, I would say the majority of them are. If you think about the kinds of companies that we invest in, they're gaining traction and they're already generating some revenue. So that precludes us from, really heavy deep tech and We do have a couple of hardware companies in there, but you could safely assume if you look at that portfolio, the majority of them are technology and SaaS businesses or have software to play, because they are those fast to market revenue generating businesses.
Thank you. Your next question, with regards to the debt on the balance sheet related to the Tankstream Labs acquisition with maturities in February 2026 and March 2026, is this being repaid or refinanced?
The good question. Well, at the moment, the debt will be repaid over a course of time. And there's no refinancing plans as such. As much as I can give you there on that business, but obviously Tankstream Labs is a profitable business. It generates good cash flows to the business. Obviously, allows us to repay any debts along the way and service our debt needs.
Thank you. Your next question. If I think about the business on a pre-IFRS 16 basis, i.e. leases being accounted for as operating cash flow, you're still burning cash. Do you expect profitability to improve during the current half to get to cash flow break even?
Yeah, most certainly. I mean, we are working towards a profitable business. Obviously, revenue is being driven through our services, through Tankstream Labs, and obviously realizations will come in due course. So yes, absolutely, we will see revenues increase and we'll see driving towards profitability. That goes without saying. And as we said, the services side of the business, the profits that come from the services get reinvested back into, the scale-ups and the startups as well. But yes, driving towards profitability is the key focus.
Thank you. A few more questions. What are the key drivers of recurring revenue growth?
Again, there's a number of things there. Tankstream Labs obviously drives revenue to the business. Our services are growing. Planet Startup, for instance, has grown significantly in the time that we've been working with them and will continue to grow. The services-led businesses as well. And then obviously working with Founders Union, Australian Technologies Competition, all of them drive revenue to the business. So there's multiple facets to our business that we're driving revenue and driving us towards profitability.
I think I'll just add to that as well. Like every asset that we have in market, all drive revenue to the business. And they all service different areas of the business and complement each other really, really well. And so, but the money, the revenue that's generated is actually coming from a couple of different areas. So one is sponsors and partners who want to get involved in the early stage tech ecosystem. So they might be banks or other service providers or technology stacks that want to get involved in founders and get in front of founders. So they go to market through Scalare, through the Founders Union and through our assets. And then the other one is the founders and the companies themselves paying for services. So that might be, Giles said, the commercial services, or it might be space, or it might be access to platforms and resources. So they're the two main revenue drivers.
And maybe just to add to that, look, the synergies piece is absolutely critical for us. Working with Tankstream Labs, working with Planet Startup, all these businesses are integrated together. So opportunities come from one over to another business, etc. So the synergies piece is going to be absolutely critical. It already is and will continue to be across all our different brands.
Thank you. Your next question. What is the pipeline for exits over the next 12 to 24 months, and what conditions need to be met for those transactions to occur?
Well, that sort of varies from industry to industry. Obviously, being a public company, we can't disclose anything until we have certainty towards it. But clearly, we're driving our companies towards an exit as and when appropriate, and we'll work closely with them. So we do expect that there will be some exits from our portfolio within the next 24 months. Obviously, as we get more clarity of that, we'll disclose that to the market, but that is definitely on the radar in the coming 24 months. And I'm sorry, probably just to add to that, as you saw from a chart earlier on when Carolyn went through it, you can see from our portfolio, there are different stages across the portfolio where companies, there's some that are really early stage, and there's some that are reaching maturity now, and we've been on the journey with them for a number of years now, and they're naturally approaching that point of acquisition, or so we'll see definitely. We expect to see some of those companies exit in the not too distant future. Of course, we'll disclose that as we reach that, but that's an opportunity for return on investment for shareholders. And as we said, there's an opportunity to reinvest and also return dividends to shareholders from those exits.
Another question on the portfolio. Can you provide a breakdown of performance across the portfolio, specifically how many investments are tracking above, in line, or below your assumptions?
Look, I'd say it's in line with what our expectations are. When you're investing in early stage technology companies, you will expect a certain number of failures in the business. That's to be expected, but you also expect some high performances. So without giving anything specific away, we are absolutely tracking probably higher than we expect in terms of the performance. And we're seeing some really standout performers within that portfolio. Some that spring to mind, and without sort of going through all of them in detail, but with you, we touched on earlier, it's been a very high performing opportunity within our portfolio, as has Asia Verify. So we're seeing Frankie One, which is a well-known business to a number of to the technology startup community. So we are seeing some high performance. So we've been very happy with the performance of the portfolio, and as I say, we're working towards some exits, I hope, in the not too distant future.
And on that, are current market conditions affecting expected exit multiples?
No, sorry, I'm just sort of coming back to one point from the previous one. And look, just standing on this slide, we have seen a huge uplift in total unrealized and realized gains of the portfolio. So, just on that slide, on the headline banners there, 209% total returns to date. So we are very happy with the portfolio. And sorry, just repeat that question again, please.
Are current market conditions affecting expected exit multiples?
That's a hard one to answer because obviously market conditions vary from sector to sector. So very hard to actually answer that one without each sector is entirely different. So market conditions vary from sector to sector. So I can't give you a specific holistic view on that one.
Your next question. What does the current deal pipeline look like in terms of quality and volume compared to prior periods?
Well, certainly, and as Carolyn's alluded to, and I'll let her say a few words on this in a minute, but given all of the assets that we have, like the Australian Technologies Competition, which by the way has launched now, so we're accepting applications for that. Having had 229 companies apply last year, we expect even more this year. Through the Tech Ready Women program, and obviously more importantly through the Founders Union, which we just launched, we get to see hundreds and hundreds of high performance companies, probably more than ever before. Carolyn, you want to say a few words on it as well?
Yeah, I was like, not only do we see a lot more companies, but we're really kind of sport for choice, and they come to us through all the different assets and also directly for investment. There's a saying that I have where, founders don't stop innovating and having great ideas because it's a bear market. And we're probably best positioned in the early stage tech sector to see the best of the best because we have such huge market share and reach into the ecosystem with, over 24,000 companies in our databases. And then the fact that we get to know them even better through the services or the accelerators or the comp means we're making, really fantastic decisions. So I would say we're quite sport for choice. But one thing I would say as well is valuations, I think, are a little bit fairer than they felt, say, 2-3 years ago. I think the fact that we have come out of a bear market means that founders are more realistic about those valuations. And I think they're also their commercial acumen around how they're going to deploy those funds to really stimulate growth in their business has matured so much.
Thank you. And one last question. What operational KPIs should investors monitor most closely over the next 6 months?
Yeah, so I mean, I'll kick off and then hand to Giles maybe. I think one would be continuing those revenue synergies. So how we accelerate revenue across the different assets by working together. So there's cross-sell opportunities from one asset to another. And I think the other one would be around, how we consolidate the back end and create efficiencies through consolidated operations, marketing, and processes.
I think coming back to the point we made earlier as well, as the synergies as well, you'll see more and more opportunities coming out of one side of the business, going across the other side of the business. We'll see lots of that coming together. There's some exciting programs coming about. I just mentioned the Australian Technologies Competition, which has just launched. That will see a whole flurry of new technology companies coming through into our ecosystem, and I'm sure touching on various different parts of the business, becoming members of Tankstream Labs, using our services, probably investment opportunities. We'll see programs coming out of Tech Ready Women. We'll see the Founders Union becoming a very important part of the ecosystem as well, bringing together new founders and sort of bringing them closer to us and allow us. So, the KPIs will be obviously how the underlying performance of each individual business together works and how they synergistically work together, and obviously, most importantly, drive revenue growth and drive towards profitability.
Thank you, Giles. Thank you, Carolyn. This concludes the Q&A session. I will now hand back to Giles for any closing remarks.
So really, from my point of view, I just want to thank investors for supporting us on this journey over 6 years, and since November 2024 as a public company, we think it's a very important platform for early stage companies and investors to get involved in this community and grow Australian technology companies and provide a really good platform for them to shine and drive, obviously, their performance and ultimately our performance. So we appreciate your ongoing support. We expect lots of exciting things coming back from the Scalare group of companies this next 6 months, the remainder of this financial year. So again, thank you, investors. Thank you to our team, and thank you to everyone involved in our ecosystem supporting us and believing in what we do. We think it's a really exciting time going forward for Scalare.